Saving and investing are great ways to buy that big purchase down the road. But what's the difference between the two? I have found the best driver when we go down this road. There's Tammy.
Okay, guys, buckle up. Although I promise you the road is not that bumpy, we're going to talk about savings and investing. Savings is something you do for the short term, things like a new car or a vacation. And savings are safe. Your money is insured when you put it in a financial institution up to $250,000 per account. But now investing, that's a little bit different. Investments carry risk, but due to the higher risk involved, your chances of making a higher return are greater. In general, the greater the risk, the higher potential for return. However, the opposite of that is also true. The greater the risk, the more money you can lose. So you need to always keep that in mind. There are two types of investments I want to tell you about today. One is called loaned investments. The other is owned investments. Now, loaned investments are when you loan money to a company or a government in return for their promise to repay the principal amount plus interest. This is actually a safer type of investment, and it includes things like government issued bonds, where maybe your city government is wanting to build some new roads, and so they issue a bond, you purchase that bond, and you eventually get your principal plus interest back on that. That's a great type of investment. The other type of investments, though, is called owned investment. That would be becoming a stockholder. As a stockholder or an owner of investments, you may receive dividends or profits that the company pays to its stockholders. But please note, these are not guaranteed. You might buy a stock and then that company go out of business and you can lose money. Or you can invest early in a company that then takes off, and down the road, you could really have a lot of money that you would have made. So as a stockholder, you have the opportunity to later sell those stocks for more than what you paid for them. And the difference in what you paid for them and what you sell them for, that is called your capital gain. And hopefully that's what you're going to have with stocks. One thing you need to remember when you're looking at these types of investments is it's important to diversify. Mutual funds are a great way to do that because a mutual fund actually has a lot of stocks in one fund. And what you hope is that even if some stocks don't do as well, other stocks will do better and you will still end up making money. So I want to leave you with two important thoughts today. Number one, invest in yourself. You can never go wrong investing in yourself, investing in your education, and investing in becoming a lifelong learner. The second thing is invest in your future. You'll be glad you did.